1310 WIBA and Ask the Experts with Wisconsin Capital Management online, wiscap.com. That's WISCAP.com. Great website to learn more about Wisconsin Capital Management. Also a fantastic opportunity if you have questions or you'd like to start a conversation. No pressure, no obligation. If you head on over to wiscap.com, that's WISCAP.com. Little chat bubble there, and you can start a conversation right from the website. Again, that's wiscap.com. That's WISCAP.com. A couple of weeks ago, Nathan brought up a really interesting point about annuities and how sometimes, they're sold as this magic solution that can create more problems than they fix. So today we're going to actually dive into something a little bit new that's been popping up quite a bit in the financial world, and it's private equity entering into retirement plans. And Nate, let's start off kind of at square one. What exactly is private equity, and how is that different from, say, like, obviously, public equity?
Yeah, exactly. What we're seeing is that a lot of financial advisors are kind of piling into private equity and other so-called alternative investments. So my dad and I are both kind of leery of this trend, so we wanted to bring it up on the show with you. So it's, not uncommon for some of these private wealth clients now, when we see their statements, to now be up to 40% in these so-called alternative investments. And that includes private equity. And just a level set here, private equity and how we got here is a good basis is always the stock market crash of 1929. That started the Great Depression. So in the 1930s, Congress stepped up and said, enough. People need transparency in their investments. And they created the SEC, the Securities Exchange Commission, in 1934. And essentially they wrote rules that, just to sum up, that kind of required companies to disclose their financials. It banned insider trading. It required suitability standards, right? So you couldn't pick risky investments for people that couldn't handle the risk. And the last major point was that it kind of limited which investment could bypass these kind of new public rules that they made. So this is the start of the private equity. So these are the investments that bypass these public rules. So the whole point was that you wanted to protect everyday investors. And if you were a sophisticated investor, you can invest in private equity.
Sounds like a pretty, solid foundation. I guess I didn't realize that some of these things and some of these principles and rules dated back so far to the early 30s, of course, following what happened in the late 20s. So we talked this morning with Tom and Nathan Plumb of Wisconsin Capital Management. Tom Plumb is a chartered financial analyst. Nathan is a certified trust financial advisor with an executive MBA. And Tom, as we talk about this protection, does that sometimes prevent average folks from accessing some of these investment that big pensions or universities may be using?
Well, that's the story that people hear, but it's only half of the truth. The poster child was called the Yale model, David Swenson's famous strategy, where endowments loaded up on private equity, venture capital, hedge funds, timber, real estate, things like that. And it looked brilliant on the surface, and it really did work for quite a while. But the reality also you have to hear. When Yale and other endowment funds needed cash, especially during stressed markets, they had to sell these private positions at 15 to 25% discounts. That's because these investments were never marked to market. They were marked to a formula, sometimes to a manager's best guess of what they're worth. It's like saying that my house is worth $500,000 because Zillow says it's worth $500,000. But then when I go to sell it, I find that people are only going to pay me $380,000. So Yale and lots of these other companies have a Zillow-priced assets, but they need real buyers. And when they come across these real buyers, sometimes they demand a haircut.
Like the analogy. Great stuff this morning as we talk with Tom Plumb and Nathan Plumb of Wisconsin Capital Management online, wiscap.com. That's WISCAP.com, WISCAP.com, wiscap.com. Don't forget to learn more about Tom and Nate all on the website. Also, start that conversation no obligation, no pressure. If you got a question, just head on over to whizcap.com. So as we talk about this stuff, Nathan, the Trump administration, I'm seeing in the headlines and in the news making private equity more accessible to regular investors.
Yes, Trump signed on August 7th an executive order that said he would like to see private equity and private investments go into retirement plans or 401ks. And the 401k market is a multi-trillion-dollar market. So it's one of the few markets that, private equity has not traditionally been in. So, but, these private equity investments, they use something called leverage, or they put debt on these investments. And so that's traditionally something that's not allowed into a 401k plan. So, and, leverage and debt, as you learned in the financial crisis, is a double-edged sword. So if you're in debt and the asset value goes up, it actually enhances your return. So you look really, really brilliant. But unfortunately, the market doesn't always go up. So when the market goes down, you're caught down with leverage. It actually amplifies your losses. And that's when you see people go bankrupt and are forced to sell things. So a lot of people have their 401ks, don't look at them very often. 401k platforms are required to give quarterly statements. But what you may see in the future, what these private equity firms are going to try to do is try to get into these target date funds that are very popular with people. So when you set up your 401k, the default is what year do you think you're going to retire, and they choose your Fidelity, Freedom, 2050, or depending on just how old you are, and that's all the thought they put into it. So, but you could unwittingly be starting to invest in these, and so we just want to raise the alarm and educate our listeners here.
It's interesting too, Nate, when you mention, a lot of us don't, whether it's we get the annual message or the email, or it used to be kind of the big printed out thing of kind of a breakdown of your 401k options and what's going on there. Folks may not be aware of what's all in there, and then of course setting themselves up as well for exposure to this. And we're going to get into kind of more of the details. Is it a good thing here to have this, and of course the importance of diversification. Before we do that, though, I did want to talk about, of course, today's show brought to you by our good friends at Wisconsin Capital Management. And one of the things that I really love about getting to know Nate and Tom has been, it's really for folks, if you've heard that generic, that cookie cutter financial advice, been listening to the program for a while, Tom and Nate are very, very different. And they want to work for you. And if you're unsure what's actually inside of your 401k, or looking for a second opinion with someone that'll sit on the same side of the table with you, of course, the folks at Wisconsin Capital Management, they're the folks you want to talk to, right, Tom?
That's right. You want to talk to somebody who has some financial training, can do some true analysis of what the impact of some of these things can be. But basically, you need to find out someone who is not selling you a product, but is looking at providing you a service. We've often talked about sustainability of businesses. If someone's selling you a product, they're selling you a product, they're hoping to get paid, and then they're hoping to move on and sell somebody else a product. But someone who is trying to work with you on a service that is not being paid by commissions or something like that, they can give you some honest and fair advice that's not pushed around by where the money is.
And I know, Nate, one of the things you want folks to do is when they get that appointment and talk with you, you want them to bring everything, don't you?
Yeah, it's easier discussion to say, hey, I don't know exactly what I have, or so I just print some statements or email them to Nathan on a secure link, or people physically bring them in. And if you don't have everything, I think that there's just so many things that you can stop you from seeing someone like us, like a financial planner or a wealth management firm. But the key thing is just to show up, and we can guide you through. Hopefully we're not intimidating, and we can guide you through the journey, and hopefully educate you and really make you feel comfortable with everything.
It's a great opportunity. No obligation. All you got to do is head on over to the website, whizcap.com. That's WISCAP.com. wizcap.com. You can schedule a conversation or a call to the office and talk directly to Tom or Nathan. Again, that's wizcap.com, WISCAP.com for Wisconsin Capital Management. Trusted advice, local roots, real expertise. We're going to continue our conversation with Tom and Nate. We will do that next as Ask the Experts with Wisconsin Capital Management continues right here on 1310 WIBA. 1310 WIBA and Ask the Experts, joined this morning by Tom Plumb, who is a chartered financial analyst, and Nathan Plumb, certified trust financial advisor with an executive MBA. Of course, they come to us from Wisconsin Capital Management, online wizcap.com. That's WISCAP.com. Don't forget, no obligation. You can start that conversation, ask those questions right online, or of course, give them a call as well. All that information available to you at wizcap.com. That's WISCAP.com. Talking this week about understanding private investment and private markets and kind of really what's out there. And Nate, I've got to ask, as we talk about more options, I think sometimes people say, well, should be looking this as a good thing, or what's kind of the takeaway overall on this, Nathan?
Yeah, this is how we really differ from a lot of our competitors and peers in the industry. So almost every financial advisor and wealth management firm really preaches diversification. And usually diversification is a good thing, but it's almost become too much of a good thing right now. So the, right style of Wall Street, which is, one of its genius things is making these financial products. They're always creating these new financial products to sell, and these people that sell them are ultimately these financial advisors and wealth management people. So the thing is, it kind of gets a little bit too far. Like, we take continued education here, as with all wealth management firms, and the answer is like, does this add to diversification? The answer is yes, no matter how poor this investment might be. I mean, if you said, should you add a timeshare to your portfolio to diversify it? On the test that your CFP takes, is the answer is always yes. So it doesn't factor things in like illiquidity or scarcity. It doesn't factor in leverage or risk or how much debt is on it. Depending how liquid things are, depending how much things are priced. So if you have these small issue stocks or bonds, they're not priced every day. And then, this Yale model that would become so popular, it just became gospel. It just, when you needed to sell, you sold it at such a big discount that it took all those beautiful historical returns away. So you end up being kind of just like the market. So you don't hear that story from other people.
I think of like the guy with the big giant toolbox, which is always super impressive and really cool and really useful, by the way, if you know how to use all those tools. The problem I think we run into is sometimes people will get themselves in over their head using a tool that they may not, may look or may believe is the proper one, but turns out they didn't know how to use it. And that's one of these things, as we talk about some of the things that could be dangerous here, you definitely want to pay attention to. And Tom, we mentioned earlier about, many financial planners, folks with CFP designations are being trained to kind of bring in whatever to a portfolio as long as it, quote unquote, as Nate pointed out, diversifies. Can you kind of explain that, kind of dig into that a little bit more, Tom?
Well, a lot of the financial planners are trained with, they use and look at a thing that we call the Cohen chart. And if you think about it, it's like a heat map that shows year by year how different asset classes have performed and how they correlated with each other. And if something has a low correlation, even if the investment is expensive, illiquid, or hard to understand, some planners are taught that they should justify adding it. Other financial planners will take a look at what provided the return last year, and with the idea that everything returns to some median, they will sell all the good investments or the investments that have gone up to buy the ones that are down, assuming that everything is just kind of random, and the ones that were down, now it's their turn to go up. So they're taught to justify their diversification and their movements because there's no idea what's going to perform. And to tell you the truth, I think you want a financial planner or somebody you're working with who has some idea about what's going to perform.
And Nate, I could see a bob in your head over there. You really want to jump in on this, don't you?
Yeah, we call it internally diversification. So there's diversification, and this one, you're so diversified, you just end up, not really taking a position at all, which, so if your CFP just says, look at this chart, no one knows what's going to happen, might as well just be in everything. These financial advisors are just essentially checking boxes to make the chart look pretty and not doing any real investing for you.
You definitely want the real stuff, not the pretty charts. Although the pretty charts do look nice, it just doesn't really help with everything. And as we talk, Tom, one final thing on this, when it comes to your portfolio and being diversified, it's really about finding things that make sense, isn't it?
Oh, yeah, definitely. And the reason why this is such a hot topic right now, Sean, is because of an old adage, follow the money. Private equity firms, hedge funds, those type of entities, their fees are typically 2 to 3 times the traditional money manager's fees. As Nathan mentioned, some of their places where they were getting the money from large endowments and pension funds, they're starting to dry up as a source of new money. So they're looking at some huge potential new money as they look to expand and to keep their fees going. So that's one of the reasons why they're trying to go to the average investor through these things like 401ks and other types of retirement savings accounts.
Talking this morning with Tom and Nate Plumb of Wisconsin Capital Management, online, wiscap.com. That's WISCAP.com. You can schedule a conversation or call the office and talk directly with Tom and Nate. Again, all you got to do is head on over to the website, wiscap.com. That's WISCAP.com for Wisconsin Capital Management. Trusted advice, local roots, and real expertise. And Nate, I saw a note in here about the buffet table, which cued me in right away. I couldn't look away. What is the buffet table? What are we talking about there, my friend?
Yeah, I personally really like analogies. So, when people tell me like, oh, I have such a great investment, it's so good that I want to include you on it. That should be kind of a red flag. And, I just kind of the analogy I like to use is just imagine being late to a busy Christmas buffet on Christmas Eve, right?
Mm-hmm.
So, and this is at this buffet, all these big pension funds and endowments and universities, they're invited in early and they already kind of, got what they wanted, picked what they wanted, ate what they wanted. And then they go, well, there's some extra food left. Why don't we just open the doors up to some smaller guys and let them just eat the leftovers? And so that ends up being kind of a decent analogy for private equity. There are some good private equity investments out there. They're extremely rare. And, if you have such a good idea as an endowment or university, I doubt you're going to share that idea to the world.
Love the analogy there. And as we kind of wrap things up real quick, when it comes to just average folks, Nathan, what should the average listener do if private equity starts showing up in their retirement plan? Yeah,
I think you just may want to rethink some of your investments. So like if you're like 43% of the people out there, you're just in some target date fund, it might be time to change that into some other options that your funds have. And also, this is a 401k of an old job, it really should incentivize you to roll it over so you can pick your own investments. So again, it's the old adage here with any kind of financial planner or wealth management firm that you just kind of review your plan. You kind of understand, what's in the plan. Like these target dates, they're just a huge mashup of other mutual funds and ETFs, and they're hard to understand. So we can, unlock that for you or kind of x-ray that for you, to use a better analogy. And then you just evaluate how much risk you're actually taking, because we want you to know that you're in the right calculated risk for your age. So if you're taking too little risk when you're young, you're not doing the right thing. If you're taking way too much risk as you're older, you're probably also not doing the right thing. So that's where everything gets bespoke, it gets personalized, and kind of catered to you to make sure that you can sleep at night.
And Nate, when we talk about this stuff, getting a second opinion, it's always good to get a second set of eyes and find somebody that's really not there to sell you any type of product, that really can give you an honest assessment of this stuff, isn't it?
Yeah, so you want to give someone a second opinion on things. If you see their first reaction is like horror, like, oh, I can't believe you're in this, or you're, I would kind of watch the shock value of that. They're obviously just putting on sales gigs for you. So I think it's just someone that gives a balanced, measured approach, that this is the pros of the portfolio, this is the cons of the portfolio, these are the risks you're taking, and not give you the, song and dance that my investments are so much better than someone else's. We like the people that come to us like that.
Yeah, and you talk about some great opportunity as well, and folks that come to see Nate and Tom, they'd love to talk with you. Again, you can start that conversation right online at wiscap.com. That's WISCAP.com. You can schedule a conversation right from the website or call the office. You can talk directly with Tom or Nate. Again, that's wiscap.com. That's WISCAP.com. And Tom, before we wrap up this morning, let's talk a little bit about Wisconsin Capital Management, a little bit of insight into the inner workings of Wisconsin Capital Management and what it's like working with both you and Nate.
Well, for Tom, we're independent, locally owned. We've been managing money in Wisconsin for nearly 40 years. We have no sales quotas. We have no product kickbacks. We just do real math, real research, and real people trying to help other people make smart decisions. So we think that we can cut through a lot of the fluff that you see, a lot of the jargon, and help you feel comfortable that the decisions you're making for your financial future fit in with what you really need to happen.
Real people making real decisions. It's a really important day to make that first call, that conversation. Get it started right now. Again, the website, wiscap.com. That's WISCAP.com. Learn more about Wisconsin Capital Management. Start that conversation right online. Of course, you can call the office, talk directly with Tom and Nate. Of course, Tom Plumb, Chartered Financial Analyst. Nathan Plumb, Certified Trust Financial Advisor with an Executive MBA. Again, you can make those appointments right online at wiscap.com. That's WISCAP.com. Tom, Nate, always great chatting with both of you guys. Enjoy this fantastic day.
Thanks, Sean. It's been wonderful chatting with you again on a subject we think is very important.
Fantastic.
Yep, absolute pleasure.
Nate, always great to see you as well. And of course, we've got news coming your way next right here on 1310 WIBA.